Is the worst over? I know a lot of you do not want to hear me asking that question and will totally disagree, and that's fine. But I'm here to talk about a few different things that are happening not only in the economy, the national housing market, as well as here in Phoenix, that are making me ask the question, is the worst over? So let's get into it. What happened in the economy last week? Well, we had a big week last week. The Fed raised the interest rate again. That was totally expected. They raised it by 25 basis points, which was great because that's what markets expected. So the reaction to that was positive, and interest rates went down for mortgages just slightly in reaction to that news. So that was all good. There was a lot of talk about being in a disinflation environment now, which basically means that inflationary prices are slowing down. That was some positive news from the Fed, things that we haven't really heard them talk about before. But we have to remember they're still on their path to continue to bring the economy into a slower pace. And so, March and May, they expect to continue to raise the interest rate by 25 basis points. They were very clear about that. They're not taking their foot off the pedal, they're just slowing the pace of hikes. So we're not seeing these 75 basis point hikes every single time. So, long story short, it was a positive outlook from the Fed, to the markets. The Fed was kind of staying on their path, but the reaction was that this was all positive news, using the word disinflation, and just doing exactly what was expected. But then what happened was Friday came around and we got this crazy jobs report saying that there was an increase of 517,000 jobs in January. And the estimate, get this, was 187,000. So, like, totally blew away estimates. Further, we found that our unemployment rate fell to 3.4%, which is the lowest since May of 1969. What the heck is going on here? So we have a Fed that is trying to slow down the economy, but our jobs numbers come in this strong. And we keep hearing all of these reports of layoffs from all of these large companies, but the jobs report comes in this strong. So there's a lot of different opinions out there of what was going on with this. One being that the data in January can be a little misleading because there's a lot of noise mixed in with that. I don't know details on that. That's just what a couple experts were saying out there, and I'm not an expert on this. And also that there were some changes in how things were measured. And so when you kind of peel back some of those numbers, it lessens the increase of jobs that they reported. It shouldn't have been that high, but regardless, it was still stronger than we expected. So interesting. So this was not good news for markets because everyone was like, oh crap, the Fed's not going to like this. And they are going to get more hawkish than what they said they were going to do on Wednesday. So it kind of took the hope out of everyone, or the wind out of their sails. So that changed the trajectory. And why do I talk about all of this? Because it affects mortgage rates. And I am not a mortgage lender. I'm not an expert in this area, but I do try to follow this as best as possible so I can help guide you guys on what's going on here. So when we talk about mortgage rates, basically, when the Fed announced the rate increase, it was good news. Mortgage rates went down a little bit. And then when the jobs report came out, markets went down and interest rates went up. So any gains that we had on the mortgage rate front last week were kind of lost on Friday, but that's okay. So this is talking about, in other words, despite anecdotes that speak to cracks in the economy, the most highly regarded measure of employment says things are super strong. Super strong jobs numbers are bad for rates, and these were no exception. Fortunately, the damage arrived one day after the lowest rates in more than 4 months. This keeps rate volatility lower in the bigger picture. So basically, we gained some, we lost some. we ended kind of similar to where we were at before. So it didn't cause a whole lot of damage on the mortgage front. So if you are a home buyer and are like, oh crap, now what rate am I getting quoted this week? Hopefully it's not too much different than what you were seeing last week. And that's what's been really positive and driving the demand in the real estate market right now, is that we have a little bit of stability in interest rates for the first time in months. And that has given some comfort to home buyers to actually get out there and feel like they're not going to have a mortgage rate that's, you know, $400 per month higher next week versus what they're looking at this week. So that's the roller coaster ride of what happened last week in mortgage rates. But let's talk about what's going on when I say, is it over? So I saw this article, probably past the worst. Housing shows signs of stabilizing to round out 2022. This is Yahoo Finance. It's a national article. It's not specific to Phoenix, but if you've been watching my channel the last few weeks, I've been talking about all this positive news in the housing market here, as far as demand recovering and a lot more activity and that kind of thing. And so it's interesting to see on a national scale that this is being reported as well. So it talks about how the housing market has really borne the brunt of the Fed's aggressive interest rate increases. But now mortgage rates are on the downswing and interested buyers are still out there. The Redfin CEO says the housing market in January was stronger than anyone could have hoped. And that's what we're saying here in Phoenix too. So on a national scale, they are seeing that as well. Still, signs of demand are tepid. Mortgage applications to purchase a home fell 10% for the week ending January 27th, which is a 41% drop from a year ago. It's going to be a drop from a year ago no matter what, because our demand is way different now. But it's not, we're starting to see recovery from the last 6 to 8 months. Home builder sentiment actually turned a corner. So confidence among single-family home builders in January rose for the first time in over a year, ending a 12-month stretch of declines and signaling a potential turning point in the housing market. So that's big news. They also talk about with existing home sales and pending home sales that there was a rise of 2.5% from the prior month in December, ending a 6-month slide, according to this release on January 27th. So they're talking about the number of homes under contract. Again, this is on a national scale. So all of this is really matching up very well with what we've been seeing in Phoenix too. And so I know every market performs differently, but it is interesting to see that we're starting to see some of this recovery across the nation. Whether it continues or not is anyone's guess, because a lot of economic factors could affect this demand coming back. But for now, it's kind of similar to what we're seeing in Phoenix. So let's talk about Phoenix. Before I jump in there, though, if any of this is of value to you, I'd love if you'd hit the like button and consider subscribing so I can see you here every week. So the Cromford Market Index, if you are not familiar, this is measuring supply and demand, and it's a predictor of where prices are heading. So we have any reading between 90 to 110 is considered a balanced market. Any reading above 110 is a seller's market, and below 90 is a buyer's market. And we're at 117.9, almost 118, which is a huge increase compared to what we've been seeing every week for a while now. So I feel very confident in saying the words seller's market at the moment, because we're not on that tipping point of 110 anymore. We're now approaching 120. Excuse me, trying to get over a cold. And so with 117, I think it's important for me to clarify, because I've heard a few comments on this, that how can you even say it's a seller's market when buyers are still getting concessions and prices are still falling? And really what I'm talking about here is, technically, when we look at these numbers, according to the CMI, it's a seller's market. Now, there are variations of sellers markets, just like there's variations of buyers markets. The word seller's market does not mean that a seller can call the price and get whatever they want from the buyer. This just means that we're not as weak as we were months ago, where sellers may have a little bit more power now, because the difference here is that we have a supply and demand difference. So supply is lower than demand, and when demand outpaces supply, obviously the buyers are going to fight over what they can get, and that benefits the seller. Now, this is still a pretty slight difference because when we look back to last year at this time, I don't remember exactly what these numbers were, but I know our supply was hanging around 25 at one point, and our demand was around 125, 130 at one point. So that was such a vast difference, which made it such an aggressive seller's market. And that's not at all what we're seeing, and that's not at all what I'm saying when I say seller's market. But just beware, this has been trending higher and higher. Demand and supply are going further and further apart. And so the more pressure that that puts on these factors, the more we will start to see that come out in the market in terms of multiple offers, in terms of buyers competing with one another by waiving an inspection or going over the asking price, or all of that stuff. So that is gradually where things go. Not saying that's where we're headed right now, but that's what will happen if we continue to see this divergence of supply and demand in the direction that we are seeing now. So that's a little bit about where we're at. Let's break it down though. Let's look at every single city because I know you guys love to see this. So we've seen huge improvements in a number of cities, especially Avondale, Chandler, Mesa, Queen Creek, Tempe, Glendale, and Phoenix all had some really massive improvements when we look at the month over month numbers. And the Cromford report says that it's really important to note that Phoenix has had such a massive improvement of 25% because Phoenix actually accounts for about 25% of the central Arizona market. So when you see such a big gain in a city that is such a big section of our entire market, it means that we're headed towards a significantly improved situation for sellers overall. So if you're not familiar with this, the green arrows mean that there is improvement for sellers, and the red arrows means that there has been deterioration in their ability to kind of have the upper hand. So all of these cities have seen improvement for sellers. Fountain Hills and Paradise Valley are the only ones that didn't, but note where their CMI is. Both are still on the high end of every other city and still in a seller's market. Now, Cave Creek, Scottsdale, Maricopa, Buckeye, they all had some modest improvement, but they're still more favorable for sellers than they were a month ago. The average change in the CMI month over month was 18% when we look at it this week. And the weeks prior, we were seeing 20%, 22%. So this has slowed down. This gain towards the seller's market has started to slow, and we can tell that from this number. We've got a few cities that are still in buyer's markets, so anything below 90. So Goodyear, Queen Creek, Maricopa, and Buckeye, all still in a buyer's market. Balanced markets are Surprise all the way through anything to under 110, so that's just Peoria. And then Gilbert and above are all technically sellers markets that we're seeing. And all of this demand that we're seeing improving, it's not just in the resale market. One of the notes that Cromford Report left in their daily observations was that Meritage Homes reported that January new home orders were 4% higher than January of 2022. Which is wild. It's not that they're just 4% higher from last month. They're higher than they were last January. So that's interesting. I wanted to call that out because that's surprising to me, and not quite sure what's going on, if that's just Meritage Homes or if that is other builders as well. The last thing I wanted to mention is we had a lot of areas, a lot of zip codes that have seen a massive increase in the number of listings that went under contract. And all of these cities have multiple zip codes that have seen an increase in their listings under contract. And if you want to know which zip codes there were in that list, check the description below. I have a link where you can request that information. But why this is important is that That's buyer activity. And that's also consistent with that national article that I shared talking about number of listings under contract. So we are seeing this increase significantly here in Phoenix. The number of listings under contract rose from, let me give you the numbers here, 5,456 to 7,810, which is an increase of 43%. And Cromford Report is saying that this is the highest percentage increase we've ever measured from one month to the next. So that's between January or December and January. So we're seeing that increase of pending sales. Essentially, that's how they were reporting it in that national article. We're seeing that here as well. In terms of our number of listings under contract and actually hitting records for that number increase that we've never seen before. So a lot of things going on in the Phoenix real estate market that are making me start to question, is the worst over? And again, you don't have to agree with it. You may think this is just the beginning of a crash, and that's totally fine. Everyone is entitled to their opinions, but just what we're seeing in these numbers and the demand coming back, assuming no other economic factors change the course, it does seem like maybe we hit a bottom and we're on our way back up. I don't know. Don't have a crystal ball, but that's just what things are saying right now in the numbers and kind of the activity in the market. So I hope this was helpful for all of you. If you want to know which zip codes in those cities have seen the most listings going under contract, check that description below and request that information. You can also take a look at your instant home value if you're considering selling. You can use my MLS to search homes. I have links for both of those, or just set up a discovery call with me if you're not sure if now is a good time to buy or sell, depending on your situation. So thanks so much for joining. I appreciate you all being here every Monday, and I will see you later this week with another video. I'm Caitlin McKegg with the Desert Dreamers team.